Great. Hello and welcome to everyone who's connecting to the second in a series of webinars focused on small and medium scale enterprises in the forest sector. And welcome back to those of you who joined the first series and are joining us again. My name is DG Chandrasekharan. I'm a senior natural resource economist here at the World Bank, and I'm working with a group of colleagues on this work on SMEs in the forest sector, and will be moderating the webinar today. Before I introduce our experts who will be with us today, I wanted to take a second to explain to you why we're doing this webinar series. So we're just going to switch over to slides. So as many of you know, there have been growing interest in SMEs in different sectors, considering their ability to generate jobs and to promote inclusive growth. And this growing interest extends to SMEs also in the forest sector. You probably know about the important role of forests in mitigating climate change. Well, forests are also an important productive asset for many countries. And in these countries, SMEs in the forest sector can offer public benefits from sustainable use of forests and their products, while also contributing to growth and inclusive job creation. SMEs in the forest sector, we see them as an important vehicle for delivering sustainable and inclusive growth. So with support from the Program on Forest, PRO4, we've decided to bring together different expertise to identify multi-sectoral solutions that work to leverage and mainstream efforts to support SMEs more broadly. So the Environment and Natural Resource Global Practice and the Finance, Competitiveness, and Innovation Global Practice in the World Bank have joined forces to see what we can do to unlock the opportunities and contribution of SMEs in the forest sector to delivering the World Bank's corporate goals on shared prosperity. So this joint initiative involves both global and country-specific analytical work, as well as a knowledge-sharing component. And this webinar is part of our knowledge-sharing component. And it's the second in a series that will look at innovative, multi-sectoral solutions for supporting SMEs in the forest sector. Now, during the first webinar, we invited our global leads on forest and landscape ecosystems and our lead in rural finance and our lead in private sector and SME competitiveness to give an overview of how they support SMEs and the approaches they use that are relevant for SMEs in the forest sector. In the second webinar, we're going to hear from those who are translating these ideas and approaches into reality. So we have with us 3 experts who have extensive project experience and who will share their knowledge with you on what they've done to support SMEs in the forest sector. So I want to introduce our 3 speakers in the order that they'll be speaking today. Our first speaker is Michael Brady, who's joining us from Jakarta. He's a senior forestry specialist with the IFC's Manufacturing, Agribusiness, and Services Advisory Team. He manages IFC's Forestry and Wood Products Advisory Program in Asia and Africa. And a central theme in his work has been to engage with private sector clients to develop viable forest plantations on degraded lands. And one of the key program goals is to strengthen business cases for SFM, or Sustainable Forest Management, by industry and SMEs. Michael has over 30 years of experience working throughout Southeast Asia on forest management and ecosystem restoration, and he will share with us some insights from the work he's been leading on strengthening community enterprise partnerships with plantation firms and community plantation development. We also have with us Duncan McQueen, who I'm sure many of you know. He's a team leader of IIED's forest team. He's globally recognized for his work that he leads on SMEs in the forest sector and on locally controlled forest farm enterprises. His work looks at governance reforms that can support such enterprises, including tenure, market access, technical extension, and organizational development. And he's currently researching organizational structures for business and policy representation that can best serve the needs of local forest farm producers. And our third presenter is Andre Aquino. Andre is a senior natural resource management specialist at the World Bank's Environment and Natural Resources Global Practice and is currently based in our country office in Maputo, in Mozambique. Andre has worked with the World Bank's Climate Change Department in Washington, D.C., as well as led our forestry and landscape work in DRC, the Democratic Republic of Congo, and Mozambique. and his work spans a range of key issues in the forest sector and on landscape management. He's doing some very innovative work on supporting SMEs and private sector investment in the forest sector in Mozambique. So I'm sure all of you are looking forward to hearing from our panelists, so I won't take much more time, but just want to remind the participants that while the presenters are sharing with you their insights, you're welcome to raise questions you may have in the chat function in this webinar, and we will have a question and answer session at the end. And this session is also being recorded for those of you who'd like to share with your colleagues later on. So thank you for joining us, and I would like to hand the floor over to Michael.
Okay, thanks, Digi. So I'm going to talk to you about some of the challenges of farmer aggregation through group certification in Indonesia and Laos. And so you could view this as a early SME development. IFC, through our manufacturing, agribusiness, and services, forestry, and wood products team, we generally focus on larger companies and in this case, a particular focus on supply chains involving farmer groups and a focus on aggregating farmer groups to better provide wood supplies to industry. I'm going to use a particular program, the Forest Investment Program, or the FIP, and talk about two private sector FIP projects in Indonesia and Laos. And the FIP program here in Southeast Asia for IFC is set up to support the establishment of industrial plantations and agroforestry, predominantly in degraded lands, with a climate change function, so to reduce emissions and support local livelihoods. So key objectives of the FIP program in both countries is to work with lead firms, and I'll explain the two companies that we're working with, to improve their performance in procedures and focus on certification. I think you probably all are aware that IFC's investments all require private sector firms to achieve independent certification. Another objective is to work with smallholder and outgrowers who are and strengthen their ability to engage with private sector companies and these two forestry firms in particular. So when we talk about aggregation, we're really focusing on a continuum, various stages of farmer group maturity, and in the case of the Indonesia and Laos projects, as you can see in the slide, our focus is really that transition from informal farmer groups. And these are farmers that are partly involved in tree growing as a number of commodities that they're focusing on, and that transition from being informal to being, I guess, basic formalized, and using the certification process as a way to strengthen aggregation for these farmer groups. This is really part of a larger challenge that we are addressing in IFC agribusiness on strengthening the overall smallholder supply chain. And so we're looking at a number of areas, including input distribution and agrifinance, traceability, and of course the smallholder aggregation assessment and training that I've explained to you. So in these two cases, I selected them because they quite nicely contrast each other. The farmer group and company situation in Laos is in the teak sector, and in this case, the tree farmers have received support to form their own group and manage themselves. So they are the group manager. Whereas in Indonesia, the company that I'll explain a little bit more about has taken on that role of group manager. So in the case of Laos, it was the Forest Trust that helped develop the farmer group and achieve FSC, FM certification, group certification. Whereas in Indonesia, it's a company called PT Xylo. It actually manufactures pencils from wood originating in Sumatra. Both companies, both farmer groups and associated companies achieved certification in about the same time. It took them about 4 or 5 years. Unfortunately, very different results. The farmer group in Laos just last year gave up its group certification for a number of reasons, which I'll review. Whereas in Indonesia, the group certification has been ongoing for almost 20 years and still functioning and expanding. In Indonesia, the company we're working with is PT Xylo. It's based in South Sumatra. This company manufactures pencils. So all the big brands that we're familiar with, that you can buy in your stationery shop, much of that comes much of those pencils come from Indonesia, particularly the ones that are FSC certified. So in this case, the company purchases wood. It's an Alstonia species from these farmer groups, and this wood is processed into pencil slats and manufactured in Java into a number of different types of colored and standard and technical pencils. But the company has had, as I said, has had FSC certification, including group certification for almost 20 years. And they've expanded this to support the farmers into developing satellite sawmills to do some preliminary processing of what they call pencil slats. This is the slat of half a pencil that eventually is glued together into a full pencil. And it's worked out very well, and I think they've benefited quite substantially from certification. In Laos, the location is Luang Prabang, and there's a well-established teak program and a number of companies purchasing teak from the smallholder farmers. As I mentioned earlier, they had achieved FSC group certification with the assumption that there would be a premium and demand for FSC certified teak, predominantly outside of Laos. And so in this case, it was a little more complicated. There were the farmers growing the teak, and the group management, which was essentially, I guess you could call them SMEs, but reasonably well organized farmer groups. And then the companies purchasing the FSC certified teak. There was no formal link between the farmer groups and the various companies purchasing the teak. So right from the beginning, there were, I guess, a variety of interests. The farmers interested in the value of teak, whether they needed to harvest it or not. It provided a form of investment. For the group managers, they were obviously interested in optimizing sales, try to manage farmers and convince them to harvest when wood was required. And then, of course, the buyers of that wood, mainly in Vientiane, and mainly smaller companies that had somewhat inconsistent orders for teak. And so, unfortunately, last year, the farmer groups gave up their certification. They weren't getting a premium for the wood. They weren't getting consistent orders, and it became too much of a challenge to afford the annual certification costs. So quite unfortunate. I think there's probably going to be efforts to try and regain certification, but unless this group situation changes, I'm concerned that the same thing will happen. So what we've been doing is working with a number of wood product manufacturing companies, try to get them to see that they really have to take responsibility to get involved in the farmer groups and sponsor these groups as group managers. So I think just some brief takeaways. I don't think I need to repeat this as a theme for this series, but smallholder wood does make a substantial contribution to regional flows of commercial wood, certainly in Indonesia and Laos. I think we're finding that the group certification process is providing an effective way to foster aggregation and professionalization of the farmer groups. Graduated approach, which is really more how the Indonesian situation evolved, has proven to be effective, where the group initially gained legal certification, moved on to eventually to forest management, but certainly took it in a graduated approach rather than trying to achieve full forest management from the beginning. And I guess the most important takeaway is that in order for group certification to be successful, I think we've certainly seen that group management, there must be involvement from the wood product manufacturing or the buyers of the wood supplies, and that's something we're working on in Laos now to try and work with some of the larger companies to get them involved as group managers. So I'll end on that, and thank you very much.
Michael, those are fantastic examples, and I think really offer some interesting insights on how similar approaches can have at the end slightly different outcomes, and what you've done in Indonesia that was different from Laos that allowed things to progress differently in Indonesia. I'm going to invite the participants to submit questions again on the chat platform, and while you're thinking up of your questions, we're going to hand over to Duncan, and at the end of the session we'll address some of the questions that you share with us. So over to Duncan.
Okay, thank you very much. It's a privilege to be here, and I'm here talking about the forest and farm facilities work in helping small and medium enterprises. The Forest and Farm Facility is a UN-hosted, an FAO-hosted finance facility for strengthening forest and farm producer organizations. That's its primary goal, and it's supported some 947 of them over the last 5 years. It's just ending its first phase and beginning its second phase. The theory of change of the FFF is what I think has made it successful, in that it invests in the strengthening of producer organizations. So a little bit like what Michael was talking about, the importance of aggregation. and it strengthens producer organizations both for business and for policy engagement. It does most of the investment on the producer organization, Pillar 1, but it also helps catalyze policy platforms and linking to global agendas in Pillars 2 and 3. We've just come to the end of 5 years, so we've got some impact to report. And in the area of business supporting SMEs, there's been a great attention to building links to service providers in the countries where FFF is operational and helping businesses through a process of market analysis and development training and kind of business incubation to help businesses diversify and add value. We've also been working with finance providers to help gain access to finance. And the results of this work have been increasing incomes and profitability. And I'll give you one or two examples of that. In addition, as I mentioned, there's a policy angle here. The forest and farm producer organizations that have been supported have a huge amount of varied strengthening that goes on, but one of the elements of it is to hold planning meetings to target policy engagement and change. And we've been helping sponsor representatives of forest and farm producer organizations to get into policy platforms and achieved some changes over the 5 years, 33 changes directly through the work and then 18 indirect. And I'll be giving some examples of those shortly. One of the most interesting examples is of how forest and farm producer organizations, when organized nationally, have helped to persuade governments to open up new incentive programs for sectoral enterprises, which collectively have been worth about 100 million US over the time frame we're talking about. So let me give you a little bit more detail because we're working in 10 countries with additional regional and global programs in 30 more. And I've hinted that there have been 260 odd examples of successful enterprise. So let me try and give you one example from Vietnam. So here in Vietnam, we're working primarily with the Vietnam National Farmers Union, which has 10 million members. And the aim is to strengthen the Vietnam Farmer Union's capacity to develop forest businesses, tree businesses, in 7 value chains: nurseries, acacia and magnolia, they're both timbers, cinnamon, spices, aromatic oils and furniture, star anise, tea and pomelo. So in Yen Bai district, we were working with a very small cooperative, 18 households, took them through a process of business training over three iterative cycles. And the group started to grow and produce acacia for the market. In fact, they were building on existing farmers who had been already planting and growing acacia. And through the related policy work, where we established at commune, district, provincial and national level platforms between the Vietnam Farmers Union and the relevant government authorities, we managed to make this particular Yen Bai district an FSC pilot site for Vietnam. So there was an FSC certification process ongoing. And that led to a particular buyer, Nafico, a company like a lead firm, as in Michael Brady's example, wanting to improve its sourcing from FSC certified farmer groups. And so they were prepared to put up an investment of some $40,000 matched by the local agroforestry cooperative, which by this time had been registered in order to be able to trade. So they built a sawmill, 1,000 meter squared sawmill, and they're starting to produce 500 to 700 meter cubes of acacia per month. this is raised incomes locally in the households, but the vision is much broader than this, is to increase the number of groups servicing the sawmill and selling to the buyer, um, and very much using the Vietnam Farmers Union as the vehicle to scale up and spread success. I won't go into all of the policy work, but just to say that working at different levels can yield different sorts of policy change. So at the district level, we had forest land use certificates being sped up for tree growing. At the provincial level, there was financial support mechanism put in to cover the costs of machinery establishing sawmills. At the national level, there was a credit program which was serving farmers, but the time frame for repayments was extended to 10 years to make sure that tree growers could repay their loans. There was a provincial cinnamon program put in. And at the local level, at the commune level, one of the big problems was that the farmers just couldn't get their trees out off their land to the sawmill. And so the commune put in 6 kilometers of road into the various farming areas in order to develop that market. Similar sorts of examples have been found in other countries. So in Bolivia, here we've not got one overarching producer organization, but 11 sectorally organized apex level farmer producer organizations. Two of them are ANPROCA, which does coffee, and then Coprasal that does cocoa. And so in Bolivia, the challenge that smallholders were facing was to get better recognition in the high quality end of the market with fair trade status. That was their aim. So again, the actual work involved some training in business development, exchanges, peer-to-peer exchanges between Bolivian and Colombian producer organizations, and then the organization of a coffee competition in which the 85 first-tier associations producing coffee under ANPROCA, the umbrella organization, competed for the best quality. And that generated a lot of international interest. A particular association from Cochabamba won it, and their coffee sort of quadrupled in price to about $53 per pound. And it's that sort of trying to sort of help producer organizations with a particular challenge, in this case, positioning their coffee in the high quality fair trade market. And at the policy side, instead of multiple tiered policy platforms, we developed technical policy platforms that were sectorally based. And the coffee platform and the cacao platform managed to persuade the government to invest 30 million and 37 million in those two commodity programs as incentives to smallholder farmers over a 5-year period, developing new markets as well. I guess what we're trying to achieve is how to make this sustainable, these kind of support activities sustainable. And what we think is that the best way of building long-term sustainable business incubation and acceleration facilities in country is to work with apex level producer organizations, often farm organizations that have subgroups working on timber and forest issues. So in that sort of model, you have many local forest and farm producer groups organized into associations, some kind of apex level federation or association, and that generates income from 4 different streams. It generates income from value added processing and marketing of its members' products. It generates income by selling training services to its members. It then may get money from project funding or from taking out its own financial loans and products. one of the things we've learned over the last 5 years is that the linking function of an incubator is so important. It's no one set of people have all the expertise required to overcome the challenges that smallholder forest producers face. So you need people who can link them to government authorities, to research and development, to business support services, to markets and buyers, to technical, agroforestry and forestry technicians, to people who can help them with social organization and association, and to finance and insurance. So that's been the model we've been trying to develop. I think I'm almost out of time, so I won't dwell on the individual case studies. I said there were many businesses, and I think the focus on the producer organization and funding them to do the work has been the key for us. So in Guatemala, here's Greece Lopez. She's the chairwoman of a Ramon Nut association, but we channeled finance to her through ACAFOP, which is a well-known umbrella association in the Petén. They have large volumes of this nut. They can sustainably offtake small amounts. They're actually planting new plantations so that they don't damage the natural forest. We've got 5 groups working there, and they're getting trained in business administration, bookkeeping, and production issues. We're pursuing with them organic certification and beginning to get marketing materials in place. When I say we, FFF is a partnership. It involves the producer organizations, it involves IUCN, IIED, and FAO, and often local partners in business and crime in the countries involved. So it's quite a package. So I don't want to claim more success than is there, but the partnership has achieved these gains. Another interesting story, just one last one. This is in Myanmar. It's resin from a staculia tree. The local community planted about 90 hectares of it. It's the gum is used in windscreen shatterproofing, plus traditional medicines and cosmetics, denture adhesives. It's very valuable. The average annual income from a staculia plantation is about 18,000 US per hectare. So you can see that with 90 hectares, they've got considerable income. And they won a National Energy Globe Award for business just this year. So I'm going to stop there. Like I said, there's been 5 years of work on this program. It's unique in the sense that it's the multilateral agency, the FAO, responsible for food and forestry, and linking up with producer organizations around the world. There's a lot more detail, and I've tried to give you the web address if you want to download anything further. Thanks very much.
Thank you very much, Duncan. I think many of the elements that you raised actually reinforce what we had heard also during the first webinar. And for those of you who participated, you might remember that helping SMEs grow really requires multiple factors to come together. And so the approach that you take to bring together access to finance, reliable infrastructure, scalable production potential, and so on really becomes important. And I think the approach that FFF has taken shows how you've tried to bring these multiple factors together. There's been a stream of questions that have come through on the chat, and we'd like to try and address them. I know Michael's already answered some of them, but for those of you who, like me, were focusing on the slides and the presentation, I think I'll still invite Michael to respond to some of these questions orally so that people can hear his response. And we're moving to questions because, unfortunately, our colleague, Andre Aquino, was unable to join at the last minute. If he is able to join while we're taking questions, then we'll certainly switch back over to hear what he's done in Mozambique. So let me start with some of the questions that we've received on the chat screen. One of them, Michael, is asking, how do you leverage finance and connect small groups to big companies in the value chain? I think both of you could offer some insights into that, but maybe we could start with Michael responding, and then Duncan, if you could add a few thoughts on that as well. So over to you, Michael.
Just looking at the question again, sorry.
So
I think
basically,
this was a question. Gigi, go ahead.
no, go ahead, Michael. We'll mute on our side.
There was a question about high costs, and I think in my presentation I referred to the high cost of certification, administration, and auditing, in which case farmer group is really challenged to cover those costs on their own, hence having a group manager through the lead firm can help with some of those costs, as was the case in Indonesia. There was a question about, do you want me to go through the written questions?
I want you to answer a couple of them. So one of the ones that I thought would be interesting to hear your thoughts on is how, through the interventions that you're both involved in, you leveraged finance and connected the small groups to big companies in the value chain. So if you could share some ideas in response to that specific question, that'd be great. And then we'll go through the other ones as time permits.
In both Indonesia and Laos, we're not at the stage of working on access to finance issues with the forest farmers. Thus, our focus really is identifying lead firms where there's a good IFC investment potential, and having those lead firms support to the forest farmers. Access to finance in both those countries in the forestry sector is still very much nascent. Actually not aware of much forestry financing for small scale. So we're fortunately it's an issue that's important, but we don't have the resources to address that.
A few thoughts on linking the smallholders to big companies, or small groups to big companies in the value chain?
Yes. Okay. This was one example that happened in Vietnam, and I think the key to success was a kind of de-risking of that investment for the private sector buyer, NAFACO. And that was achieved by sort of having a partnership between three main groups: the government agency at provincial and district level, and then they were very much trying to pilot FSC certification in the region from the government perspective, and then the Vietnam Farmers Union itself that sort of made a commitment to spreading understanding of how to establish tree growing groups in this particular province, so that the buyer had confidence that there would be enough production to repay the investment. And then, of course, the private sector player themselves. And I think that sort of confidence building is often what's required, and requires some brokering. I continue to think that investment into value chains, into smallholders by buyers is probably one of the easier routes into financing some of these value-added processing type technologies. There were some other questions. There were questions about, is it always fast-growing species? Mostly. Farmers, most of the smallholders we work with are farmers. That's why it's called the Forest and Farm Facility. they like to have a return in a reasonable period of time. So yeah, so fast-growing species are obviously have significant advantage there. There have been some questions of the sustainability of that model and the need to diversify. Um, so there have been some examples of financing for the establishment of tree crops that builds in a conditionality of putting in multiple species. Or of in the tree bank in Thailand, one of the lessons we were trying to learn from there is, can you finance agricultural loans but with trees as the collateral, so that you're building a multi-purpose agroforestry system rather than a monoculture. So those are potentially interesting ways to get around some of the risks of fast-growing species monocultures. And then there was a question about Africa. Do we have any lessons from Africa? Yeah, very many lessons. I think in Kenya, one of the partner countries, farmer tree growing really is going to be the future for the supply of timber. Not just for fence poles and telegraph poles, but for major construction timber in the future, and possibly for biomass energy if that were to begin to become a reality. In other countries, in the Gambia, we've been working the effectiveness of having one national agricultural natural resources platform where you can bring the apex level producer groups, including community forest representatives, to talk to ministers about policy changes. So we've had a very rapid transfer of community forest rights in the Gambia that was occasioned by having that single national platform on agriculture and natural resources. In many other African countries, Zambia and Liberia, two examples in which charcoal production, producer groups making business out of charcoal and using the organization of the producer organization to try and legalize and formalize what is often a chaotic and corrupted sector. I think is showing some interesting results. In both those countries, there are new charcoal policies coming that have been developed by producer organizations
Thanks,
of
Bente. So
farm
we have had
tree
several other
grower and
questions as you've
charcoal
noted.
makers.
Pravina
So that's
wanted to
interesting.
know how these groups are formed. Um, we've also had a question from Nam Pham, specifically to Michael, on whether you can share the approach or guidance you've used from a starting point of wood product manufacturing. I'm wondering if you both would like to take those questions. And Michael, if we could have you speak closer to the microphone. Your voice was a little soft in the last round of answers. Thanks.
Okay, I can address the question on the wood product manufacturing, and in both Indonesia and Laos, wood products traditionally have come from natural species, and there is a very clear and fast-moving trend towards planted species, and the manufacturing sector is moving over fairly rapidly. So in a lot of cases, the wood product manufacturing has been ongoing for decades. Not seeing a lot of new actors coming in, but there's a real transition from the types of species and the different wood products. So in both countries, we're seeing quite a nice transition going on. So in that sense, as I said, we're not seeing a lot of new enterprise development. It's really more shifting. And as companies struggle to obtain natural wood supplies through for various reasons, either it's all gone, or there's new restrictions, or they don't have access to concessions. putting a lot more demand for planted forests. I think that answers that question.
Duncan, would you like to share a few thoughts on how FFF, but also you and other activities that you've been involved in, have facilitated the formation of the groups that you work with?
Certainly. I think it's a challenge. Often in remote areas, you have community structures that are far from uh, unified, and there are some basic advantages of forming groups that have to be communicated and explained, often quite carefully, to farmers in those groups. You often get farmer groups that have formed to try and agree a price, while all the farmers continue to sell individually to traders. And in our experience, you have to try and move from that situation to one in which the farmers are selling as a group and have created a group structure with a group bank account that then purchases product from the farmers and sells on, and explaining the advantages of that and setting up the internal organizational management and decision making procedures for that can take quite a lot of time. And it's not, there's no sort of shortcut to it. We're lucky in that we often, because we're looking for established producer organizations who we can fund, sometimes to extend their work into tree growing and forest sectors. They often have quite well established approaches for establishing and strengthening new groups. Yeah, but in terms of, better negotiating power with buyers is usually the principal motivation. Shared information about markets and contacts is another very important thing. Reducing costs of production, sharing transport, and these are elementary sort of things about why it would be good to form a group, but often not really understood, and you often have to have quite a lot of attention to conflict resolution procedures early on. Yeah. I mean, for example, I've just been working with an ecotourism business in which they were doing tubing and caving in a beautiful, naturally preserved forest, and they hadn't cleared their business with the community hierarchy. And as it happened, the tubing site went through the woman's bathing area in the village, and the community authority shut the group down and put in place a different management team. So you have to have a process of developing these groups that also respects traditional authorities and hierarchies in these areas, that often involving the traditional authorities as a board level type structure, or financial vigilance oversight structure, to a more dedicated business group within the community can be the way forward.
And also thank you for the insight from that last example. I think it really points to the importance, as you said, of ensuring that as you work with these groups or form these groups, you take on or look at all dimensions, not just what they can do together from an economic standpoint. So some of the other questions that we have, I think would be great to hear your thoughts on. One is from Tabea, who's asking about experiences in plantations by smallholder wood farmers that use an ecosystem approach for reforestation. Would you have examples or experiences with such an approach? Can we start with Michael?
It's interesting to see the reference to Polonia. That's often referred to as a miracle species, but hasn't proven to be quite as effective as it was hoped. certainly in cases where farmers are planting fast-growing species on, within their farm property, an ecosystem approach, certainly in Southeast Asia involving agroforestry is very, very common if we can call that an ecosystem approach. But certainly, the more species planted, the more soil stability is promoted, more permanent cover is. So from an agroforestry perspective, I would say that would be fulfilling to a large degree an ecosystem approach. And as I said, in Asia, Southeast Asia, that's extremely common. And I'm doing some work in Kenya as well, and I'm seeing that there also. Um, from I guess where we're dealing with planted species, these are not cases where farmers are managing natural forests. That's certainly possible, but the economics are very challenging. So from that perspective, an ecosystem approach under natural systems is not that
Thanks, Michael. Let me actually
interested in the question
take
of
us.
Bologna.
Yeah. But let me actually take us to another question that I think would be interesting to hear your thoughts on, and that's specifically on one from Matthew, on whether you know of anyone who's experimented with reverse mortgage type of financing for tree growing. And he says he's asking this because he worries about pushing debt onto these communities as opposed to enabling them to monetize their assets. Have either of you come across that sort of an approach or type of financing for tree growing? Duncan?
No, is the quick answer. I don't think. I mean, I know that in several outgrower schemes there are um, sort of reverse mortgage type financing where you get paid for the establishment and so on, and then at a certain period you have some kind of contract with the supplier of that finance in terms of product. Um, it's quite difficult to organize in a way that is happy for both sides, I think. Yeah. Um, I I I think debt financing into communities is a problem. We're much more keen on trying to use early sales to capitalize revolving loan funds that whose initial purpose is to expand the cultivation of tree crops to overcome those costs then paid back over time, um, where the finance is locally managed and controlled rather than getting them into debt with an external finance provider. There should be many ways in which Red Plus finance flows seamlessly to producer organizations for investment in the establishment of tree-based businesses.
Michael, how about you?
I'm working quite a bit. So I'm working quite a bit with outgrower schemes in Laos, and there's a lot of experience, a lot of variation in outgrower schemes, ranging from a very formal contract-based scheme with financing, provided by the lead firm, inputs, extension, and then eventual, sale of the tree. It's been some mixed results with that formal approach, but we're also working with companies on a much more opportunistic approach where companies are experimenting with providing essentially free inputs, seedlings, fertilizer, some extension, trying to keep costs low, but with the expectation that even if it's 10, 20, 30% of those trees come back to them, that would be more than economic. So there's a very interesting continuum of outgrower approaches. Be happy to provide more information if people are interested in that.
Thank you. Yes, I'm sure there would be interest in receiving some more information on that, and we'll work with you to make that available to members who are participating in this session. Continuing on the topic of financing, there's a question from Ajay asking Duncan specifically if the financing you leveraged in the case of Vietnam and Bolivia were from public sector banks or private banks, and also if you had any information on the performance of these loans. And then we have one other question I hope we can take on incubators. So Duncan, over to you.
I'm not even sure it was bank. I think, but it was certainly, yeah, it was certainly public sector, not private banks, in both Vietnam and Bolivia. And it's too early to have any results on the performance. I'm afraid both of those schemes were put in place in 2017. Yeah, and then about the importance of forest business incubation. Yeah, the incubators, how do you incubate businesses in remote environments is a really interesting question, because the deal flow of potential paying clients who would pay for incubator services in remote forest areas is too low to establish a conventional model. So in remote areas, you tend to have one of sort of four different types of incubator. You have long-established NGOs who do this work mostly with project funding and highly variable capacity to follow that incubation process because of that short-term project funding. You have private incubators, for-profit incubators, but again subsidized heavily by some development program, but trying to sell their services. You have some sort of government extension agencies. Sometimes you have departments in government. Guatemala had a forest industry department that try and perform some of these roles. Or you have producer organizations in which an established or association or federated producer organization, which is earning its own money, devotes some of that money to business incubation for potential member associations and cooperatives. So I think financing is a real challenge. Yeah. We've just produced a book called Forest Business Incubation. It has case studies from all around the world. It's available on the IID website, and there are lots of lessons about promoting and empowering incubators. So please do have a look at that. And we're trying to produce a toolkit that has distills those lessons into guidance for people who want to improve the incubation capacity in their particular sphere.
Fantastic. Thank you for that. And I think what we will also try to do is make available to everyone who's participated the web links that are relevant for accessing the material that Duncan was mentioning. It should be easy to find on the IIED website. So Duncan and Michael, wanted to thank you both. We've actually hit the close of our session. I think you both shared some fantastic examples and also really shared the range of approaches that you have to work with to put in place these multi-sectoral solutions that are really important for supporting SMEs. For those who are also looking forward to hearing what Andre would have to share with us, we will have a podcast with Andre, and so that information will be accessible to you via podcast. And also, for those who know that this is a series, stay tuned. We will have the third and fourth webinars in the series coming up in the next 2 to 3 months. And in those, we will bring in experts with access to finance background, as well as experts with a strong background in SME competitiveness. So thank you all for joining. Thanks again to Duncan and Michael, and wish you all a great rest of your day. Thanks. Bye-bye.
Thanks very much.